There are 123 new insider trades. Almost all of them are totally useless, but we'll look through them all to find those handful that could be high signal and help us outperform. So we'll start with the daily data here. We can see kind of a pretty normal day, maybe a slightly higher actually in terms of the number of purchases coming in, which is why, of course, we are seeing now a couple days in a row here of the percent of insider trades coming in that are actually above the median. However, we will notice really on both days, but then we noticed this the last video, but then also this video, a lot of IPO buying and a lot of kind of just not very interesting buying. So overall, the delta you're seeing here between like super low and super high tends to not be quite as drastic as it looks. You just happen to get, like today, we'll see there's like 8 trades that came in from Heiko that are probably just, that appear to just be kind of scheduled normal trades from a bunch of executives that just don't really mean anything. But you know, when you're only having 100 and something trades come in and a tiny fraction of them are purchases, you know, that's a pretty large chunk of them right there. So that's kind of why it's looking like the percent of trades that are buys is higher than it really probably is. But on the flip side, you know, most of the sales also are just 10b51 sales, so who knows. Overall, I'd say just a pretty normal day here. If we look kind of, the week's still a little young, but if we look over, we're about halfway through the month, trending relatively low in the terms of the percent of trades that are buys. However, it is earnings season. You know, earnings season does tend to be pretty low, so we are actually still probably a little lower than expected. So you could maybe argue it's slightly bearish, but I think it's still kind of within the range of normal and nothing really to be too worried about. So let's go to CEOwatcher.com and take a look at the trades. So we'll start with the purchases, of course. Let's pick the most recent day here, grab purchases, and then we will sort by transaction value, of course. This out of the way for now. So as we'll take a look, so kind of what I was mentioning here, you'll see a bunch of trades that just aren't very interesting here. We've got a handful of executives here at BRT Apartments who are all related, obviously. Gold, I'm assuming Gold Investors is just both Jeffrey and Matthew are part of that. It's them two in there, but you know, buying the stock here, which we can maybe take a look at, but it's just simply not interesting. We can see all the Heiko purchases, which I guess we can just start with, and we can quickly go take a look. And I really couldn't figure out exactly what these purchases are for. It's clearly some sort of agreement or something going on, because you can take a look and they're all the same size virtually, 676 shares versus 672. And then if we look historically, we can see that they also all bought here as well back in October of last year. If we just go down 1021, all of them bought relatively same price. You know, maybe they bought a smidge more, but if we try to go look at like what's going on with any of these, they don't really tell you anything. So they just sort of, I mean, all of the notes here are just about the owner, how the ownership is set up, which is how these insiders funds are sort of set up, you know, whether it's in their 401k, whether it's a charitable foundation, what, you know, whatever it might be. They're just telling you what they are. It doesn't actually tell you anything about the purchase. So I'm not 100% sure what's going on here. I didn't spend a ton of time to really dive into it, but you're seeing a bunch of insiders make the same exact trade. It's likely just some sort of kind of more systematic buying that they're doing, and not really a particularly high signal purchase. So because of that, you know, you can just kind of write it off pretty quickly as probably not super interesting. Saba Capital, of course, is one that we've seen quite a bit now. They're just continuing to buy ASA Gold here. Tons and tons and tons of buying, which it is kind of interesting if we go take a look at Saba Capital, which we'll look at in a second. But all of their trades for the most part are lots of sales. The only thing they're consistently buying here is ASA, which you can see purchase, 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 you know, purchase, purchase. All the rest of these are sales, except for there's a couple down here about a month ago they bought. Yeah, these all look to be ASA. I thought maybe they had bought a couple of other ones. Here we go. If we get way down here in August, you can see they bought like Ellsworth Growth Corp. But for the most part, pretty much only buying ASA Capital or ASA Gold and precious metals. Everything else has been a sale. So I don't think it's particularly high signal, as you know, they're making tons of trades obviously, but it is interesting to see that the only thing they're really buying is ASA Gold, and they're selling off everything else. Alliance Bernstein, New Pennsylvania, Aberdeen Life Sciences, you know, all of these they're kind of getting rid of. So BlackRock California, that's kind of interesting to see, but I don't think there's much for us to do there. Just quickly looking through the rest of these, we've got like Alliance Laundry here, but this is just part of an IPO. This company just IPO'd, so the CEO or director, or whoever this was, director I think, is bought a little chunk as part of the IPO. Don't think that's particularly high signal. So overall, not a ton. Biopharma here that we took a look at before. We've got this case, they're just part of a purchase agreement after the stock, they raised some money after the stock's been on an absolute tear, 200% in the last 6 months, decided to raise some money. So again, these kind of private placements, purchase agreements, public offerings, that kind of thing don't tend to be high signal, so can write those off pretty quickly. But if we go to the very top here, we've got Grindr, and we've got the director here buying $13 million of stock. It's $1 million or a million share purchase. If we go to Grindr itself, you can see just, well, one, good timing by the executives back here in the beginning of 2025. Nailed that stock down 40%, even more, 50% probably since here. And then we now see that we'll notice you see a sale and a buy. So we actually have a private sale between these two directors. And this director actually agreed to buy it at a slight surplus here, a slight premium, buying it at $13.15, which the stock is up, which we'll see why in a second. But the stock is actually up a decent bit today, up to it came down a little bit actually after open, but so it's only up to $13.14, which is, almost the same exact price that he bought it for. So you're able to get it at the same price now. The reason I think this is interesting is if we look historically at this guy's purchases, looking back here, pretty good timing overall, honestly. Most of these trades, if not all of them actually, are positive. This win rate's not going to quite help us because of these two sales where they're negative. But yeah, as you can see, definitely since he bought them at least, they're all up. And even over the different time frames, I think if you looked at them, maybe the 1 month time frame, not quite, but averaging 11% 3-month returns, 19% 6 month, and 70% 1 year is certainly notable. So pretty good timing. We tend to avoid the 10% owners a little bit, or at least discount them quite a bit. The only time they do get interesting is when you see returns like this. I mean, 70% on average, 19% on average, all positive returns is really, really strong. And then we also obviously have a 1.5 year wait between these two. So it took quite a while before he bought. He didn't participate in the selling up here, but now waited for the stock to get all the way back down to 12 before buying again, which is interesting. So I think just from an insider trading standpoint, it is kind of the fact that he's buying it from another director is kind of interesting, and might dampen a little bit because it's not just a single insider buying, an insider is also selling. But I think this insider in particular is relatively high signal, so I think this is a pretty high signal buy overall. And as we can see, obviously insider selling has kind of slowed down or virtually stopped since back here. So you can see insiders overall clearly seem more bullish than they were before. And then as we can see down here, Grindr confirms buyout interest from top investors. So now it's getting a little, and they confirmed the receipt of a letter, which maybe we can go take a look at now, but let's see if they tell us. So yeah, go private deal. They received a large, I'm not 100% sure if they're telling it received, I'm assuming they received the letter from these shareholders. This is not the board. So it looks like the guy buying the stock also wants to take it private and part of this go private deal. So I think that makes it even a little more interesting there. Majority owner ways going private, I guess. So it looks like it's been going on for a few days now, it looks like. But so now you've got this go private deal. I saw somewhere else, I don't know how true, it seems like the rumors are around $15, which most people would say is quite a bit too low, because if we go, I mean, you already saw the stock price, but the stock, has been crushed here year to date, even though, the stock, basically the stock peaked when earnings estimates actually have come up a little bit. So it's pretty interesting to see that earnings are actually kind of going in the right direction. If we take a look at the valuation here, we can see kind of regardless of what valuation you want to use, trading at a pretty low multiple here, or I mean, a very low multiple, especially historically for them at least, maybe not necessarily compared to the industry as a whole, but compared to their own industry, they're definitely trading quite cheaply here. And then if we go to transcripts and we can take a look at, and you actually see really good numbers. Revenue up 27%, direct revenue up 24%, EBITDA margin slightly came down a little bit due to stock-based compensation investments, so that's a little bit of a hit there. But, adjusted EBITDA margins have remained pretty stable. Their net income turned positive, MAU growth, paying user growth, average revenue per user growth. So really a lot of good numbers coming out of there. Let's see if they talk about anything. They also haven't raised prices in forever, which, I don't think they're going to do. As you can see here, pricing experiments are planned, but no material impact expected this year. But the first price increases since 2018 could be considered. It doesn't seem like that's going to come anytime soon, but we saw strong MAU growth, as we mentioned, strong engagement. My favorite part is they're developing a proprietary AI stack called GAI. So big fan of that. So obviously implementing AI, though always some margin problems, some cost concerns when you start to implement AI, which could be, a little bit of a headwind, and who knows how much it's really going to help them. But, they reaffirmed their full year revenue guide. They reaffirmed their adjusted EBITDA margins, revenue growing, users growing. All of that looks pretty good. What drove the growth? They highlight strong engagement among younger users, and MAU growth is organic but supported by marketing localization and intent growth. So overall, I would say that you now now have a company trading pretty cheaply, a high signal insider buy. And normally when you see these kind of dip buys, these sort of turnaround buys, you normally don't actually have rising estimates and good revenue and good sales, revenue and user numbers like they do. So all of that I think sets up for a pretty compelling insider buy here with the buyout offer obviously on the table as well. So all of this I think sets up for actually a very, very compelling insider purchase. Anything else interesting here? We already looked at these, explained why none of those are interesting. Bank of America, 10% owner buying the stock. It looks like something else might be going on here because it's zero. So I don't know what exactly they're doing here, buying and selling at the same time. So I don't really care what they're doing, but so not interesting. Concentrix, here's another quick interesting one that we've looked at where we've got they had some margin pressures which caused their stock to get hit here after earnings. Got hit before as well. So stock fell after earnings, about 15% or so, and now you've got the CEO here buying the stock a couple of times. Not huge purchases, but that's the same size as all his other purchases, so nothing out of the ordinary there. But now we've got two purchases post the earnings dip. If we look historically speaking, his buys actually performed pretty well. He bought, almost exactly at the low here in April of 24 at $53 before it got up to about just above 70 there over the next, 3 months or so? Yeah, over the next 3 months. And then we've got another buy down here where again, $47 in April of 25 before it got up to 60, and then started to fall down again. So you can see the 3-month return's quite good. As we get into a little longer term, not so good. But in the short term, this guy tends to nail his short-term buys. Also, just historically speaking, very high signal. Short-term dip buys tend to be quite high signal. And in this case, we already talked about this company before, so I won't go too much into it. But in this case, they actually, the issue was with margin headwinds, it looked like, as to why they were getting hit. Let's see if I'll tell you. Earnings missed and reduced guidance. They had worse than expected adjusted EPS and cut its adjusted EPS guidance. But if we then dig into the transcript, I'll tell you, I believe it was margin issues, if I recall correctly. Adjusted EBITDA, margin impacted by excess capacity and transformation costs. Sequential margin, so here's the thing. Sequential margin improvement expected. EPS slightly below guidance. Again, is going to be due to margin share repurchases. Did they repurchase any? Active repurchases at $53 million a share. It's hard to know exactly. Sometimes these tables don't quite do it right. I don't know if they bought 42 million more in stock or if they have 42 million left and they bought 3 million. I don't know. Either way, they certainly bought some stock and they were buying it at $53, which is higher than what's at. Now, they increased their dividend, which is interesting, reflecting confidence in cash flow generation, which in that case, it comes down to basically what were the issues here where, let's see, dividend, they increased dividend. I don't know why they're not telling us as much about margins here, but they're basically, you can kind of get the gist. They do, if you read through this more closely, they had margin issues, which was what was causing their EPS to come down, but they're expecting those issues to be short-lived and for them to improve, which is also why they then increase their dividend per share, because they are confident that those margins will recover, which will give them more free cash flow, which means they can pay out dividends. So overall, I would argue while the stock is now down another 5% since this first buy, hasn't quite turned around yet, I would argue most of this is setting up for the executive team at least to believe that these are some short-term margin pressures, and in history from at least the CEO purchasing would tell us that, we'd probably expect a short-term turnaround here at the company. Obviously, all the macro factors that we can't handle, market's a little crazy, but overall, I think this is another pretty high signal insider buy. This is specifically, a short-term dip buy, an overreaction buy, we might call it, where, the market is much more concerned about the margin headwinds than it appears that the insiders are. So that's another pretty high signal insider purchase in my opinion. Coming down here, we've got a couple of 10b5-1 purchases, which we tend to ignore. Not the most interesting, as those have been scheduled way ahead of time. Anything else down here? So Lovesac is another interesting one where, again, a small purchase, though I will say, just historically speaking, the actual size of insider purchases doesn't correlate historically, at least back to 2009, with the forward performance of the stock. And in fact, on average, the smaller trades, like below 60K or so, tend to perform a little better, though that's likely, I need to dig more into this, it's likely just because insider purchasing at smaller companies tends to be a little better. So absolute dollar value doesn't tend to matter that much, though larger percent holdings does have some correlation with positive. So all of that would lead me to believe it's mostly because insiders making relatively large purchases for themselves, but absolutely small purchases are the highest signal, which would correlate more with, smaller companies. So smaller companies have poorer insiders, insiders with less money, so they're not able to buy as much stock, but they will significantly increase their holdings. So in this case, it is both a small purchase and not a significant significant increase of holdings. So overall, that starts off with a red flag or kind of a point against it. It's going to prevent it from being the highest signal purchase. But one thing you will notice that is two things here that are very high signal. One, first sale ever after a ton of sales, or first purchase ever after a ton of sales. So this reversal, flipping from selling and selling a lot and selling frequently to buying, is certainly notable. Secondly, buying the dip here. This is a longer term dip, down 50% almost in the last year. So this would be a turnaround play now, and we're trying to craft a story for why this turnaround might perform well and might be why the company is set up now to turn around and start to right the ship. If we look historically at his sales, they're kind of choppy, though on average, the stock has gone down quite a bit, but these kind of look like pretty scheduled, consistent selling here, which, maybe it looks like he did turn on a 10b5-1 plan maybe at the beginning of 2021 and then kind of sold throughout. So it did work out. I don't know how high of a signal necessarily I would call these sales. They're kind of 50-50. Definitely not a terrible seller, but I don't know if he's the highest signal. So overall, the reason this insider trade is interesting is because it's a dip buy, a long-term, a turnaround play, and then particularly the fact that he's sold a ton of times before and is just now buying is notable. And then if we go take a look though at the story itself, I don't think the story's not the strongest story I've ever seen. So slightly flat to slightly up here. Earnings estimates going forward. Obviously the stock is down quite a bit, so trading below all of its moving averages there. If we go look at its historical valuation metrics, it kind of slightly down. It seems probably using like EV/EBITDA. You might use PE, which is not quite down as much, but I'd probably lean towards, just because I think are their earnings coming in? No, their earnings are positive. So yeah, kind of pick whichever one you prefer. But in this case, I would say they're probably slightly lower valuation, slightly undervalued compared to their historic norm. Though, a lot of times when companies first go public, and they tend to be slightly elevated, so it can kind of throw it off. If we look at a more narrow time frame over the last 3 months, it looks like they're probably more, still maybe slightly undervalued, but probably more fairly valued. So I don't know. This one's kind of hard to get a read here on what exactly their valuation looks like. At least just from these, you'd want to dive into those numbers a little bit more. But for now, we're just going to focus on kind of the more overall story and the insider purchase here. So they had a poor earnings, which was just about a month ago, and now you've got the insider buying the stock after that. Any press releases here? They announced participation in upcoming investor conference. Brittany Snow is they hired a new chief marketing officer. One of their things is now getting Brittany Snow, the actress, into some of their marketing materials here. And then we can really get a sense for what this turnaround is, what they're trying to do with this turnaround, which you will notice there are some positives for why this turnaround might actually be happening. Q2 sales grew 2.5% year over year, even though the category overall is declining. That's pretty impressive. And they're really focusing on showroom sales, which were up 10% year over year, which is pretty good. However, obviously on the flip side, internet sales going down, which kind of to be expected because they are focusing on showroom, and then just the internet's more competitive, which is a negative. But if they're truly, this is just a focus on showroom, and they are right that showroom, getting sales through showrooms is the better move, then, the internet decline might not be too big of an issue. Gross margin declined a little bit due to tariffs, which this is going to become kind of the main argument against the story right now, or one of them, at least in the near term, is the tariff pressure that they have. SG&A improved to only 45% of sales, so they've got some good expense leverage there, some good operating leverage there, which is always good to see, keeping costs down. Marketing spend, they're keeping pretty flat. What else do we have here? Adjusted EBITDA, just slightly positive, but was down a little bit due to margin pressures, which again, margin pressures due to tariffs, which we'll look at in a second. They repurchased $6 million of stock, which is good. They also, showroom expansion here continues with 16 new additions, so slowing down a little bit, but overall they have this push for trying to sell through their showrooms instead of through online or through other means. They also brought in a new CMO, which has this brand this transition of their brand and this marketing evolution they're trying to go through, including bringing on Brittany Snow, including switching away from TV ads to more digital ads that they hope can be more efficient. All that kind of stuff is going on, so there's kind of a positive. You do like to see in turnarounds. You like to see a product strategy, some sort of strategy evolution, and some new blood in the management suite. So we've got that. Customer acquisition engines, they're just talking about how they're now focusing on search engine stuff, YouTube, digital marketing versus TV marketing. So for guidance, they're showing some growth in sales, which again, the category itself is struggling quite a bit. So nice to see some sales growth going on here. Let's see if they talk about margin pressures. So they do have gross margin pressures, but they also have been doing better with their SG&A and some marketing efficiency. But where do those margin pressures come from? We can take a look. Reflects tariffs would be the big one. And let's see if they talk more about tariffs. Somewhere in here, gross margin lower due to tariffs. And then they had some promotional discounting too, but that's less of an issue. They are expected to continue some elevated promotional spend, so that'll still hit margins a little bit, but again, that's kind of an easier one to deal with than tariffs, which you'd be more concerned about. And here you go. So they had a recent doubling of tariffs in key sourcing countries, which increased cost pressure, and the timing of moving manufacturing out of China is being slower. So concentrating the tariff impact in Q3, which is this coming quarter, I believe, right? I think this last one, yeah, Q2. So this next quarter now that we're in right now, they consider their Q3, that they expect to continue to have tariff issues in here. So that would be the main near-term concern here, is just what's going on with these tariffs. And I do think if you want to be safe, this is kind of one, if this stock does actually turn around, it's going to be a pretty long-term turnaround here. As a, I mean, the stock has a long way to go. It's only a 220 market cap company. It has a long way to go if it does actually turn things around. On the flip side, this CEO, no, that was the previous CEO who was short-term. This guy actually, historically, his sales have been, as we mentioned, maybe not the highest signal, but positive returns overall. So in this case, never bought before, so we don't actually, this is not where I want to go. Never bought before, so we don't know how his purchases will go. But as a longer-term turnaround play, you have the freedom to now wait and see. You can just let Q3 roll through, and even if tariffs come in below what they're expecting and they have a killer quarter, the stock's only going to go up 20% or whatever it is, 30%, and it still will have a long way to go from there. Obviously, you'd like to catch those, but you're also saving yourself from some issues if Q3 earnings comes out and the tariffs are still a big issue, or a bigger issue than expected, and then it causes some issues. So you can kind of wait to see if you'd like. It's sort of up to you how you want to play this. For me overall, so what drove the EBITDA guidance revision? Both tariffs and increased promotional discount. Tariffs doubled in some countries, and we have the whole China concern going on. So to me, that is the main concern here. Is I think the insider purchase is kind of like a moderate signal. I think the fact that it's pretty low, only a $14,000 buy, could run the risk of it just being a signaling thing where he's just trying to like, hey market, look, I actually believe in this stock, but I'm only going to spend 14 grand on it. It doesn't really mean anything. I think that is a risk, and then obviously this tariff stuff is a risk. So for me, it's probably a pass for now. It's kind of like on the line, but probably a little below the line for me, just because of those things. But overall, there is like a clear turnaround story here. I just like to see a little more conviction out of the CEO. If truly tariffs aren't going to be an issue and next quarter and things are going to look good, I'd like to see you make more than a $14,000 purchase. But I think that is still pretty interesting insider purchase. Let's switch over to the sales real quick, which we can run through pretty quickly as there's not much going on there. So a big sale by a 10% owner here at Chewy, getting rid of they still own a ton of the stock, so I don't know how much of a signal that really is. If you remember, this was the company that just IPO'd, so selling as part of the IPO, not a big deal. We do see some private placement selling by Galaxy, which obviously this is a company I have no interest in attempting to short, because it's way too popular of a stock. But and when these insiders tried to sell back here, it didn't do anything. But this is the largest insider selling we've seen so far, so could be notable, but I don't think so. Continued selling post IPO at CoreWeave. Deutsche Telekom's been selling T-Mobile forever. Grindr, this is the guy that was selling to the other Grindr one we just saw. Caterpillar is kind of interesting just because this guy's, which we don't have here, but we're working on a new upgraded version of the site where the data goes back way farther. This is this guy's, the exec chairman here. It's his first ever selling since 2014. So took 11 years off from selling and then turned on a 10b5-1 plan, which 10b5-1 plan, as you can see up here. So first ever 10b5-1 plan, stock hasn't cared at all. Stock's on a tear, 80% in the last 6 months, but he has started selling the stock. And if we do go take a look at some valuation multiples, we will see this is a very, very expensive stock, historically speaking, which the stock's old enough we can go back as far as we want. No matter how far back you go, it is trading at a all-time high EV/EBITDA, all-time high EV sales. Not quite an all-time high price to earnings ratio, but I think you can pretty confidently say this is a very expensive stock right now. However, of course, very, very strong momentum. So trying to get the timing right if you were interested in either selling or shorting is going to be kind of the tough part here. But I would say, you know, probably overvalued, and it seems like the exec chairman also thinks it's overvalued. So I think that is interesting. Anything else? Lilly Endowment we've seen for a while. These Urban Outfitters, couple Urban Outfitters sales, but I believe those are just checkbox 10b51s, so we can skip over those. Anything else interesting in here? Sun Valley Gold taking some profits here from Vista Gold, which obviously all gold stocks have been up a ton, 200% last year, 120% in the last 3 months. And just taking some profits there. I don't think super high signal, but gold's been on a tear, so they're selling off some. And again, only selling 1% of their holdings. Probably not too big of a deal there. Anything else that was interesting? So Corn Ferry could be kind of interesting. Was there any other ones in here? You can take a look at Corn Ferry real quick. This one I couldn't. This one will take you a little bit more research to probably try to figure out what's going on. But we do have a little bit of a collection of selling here. We had some cluster selling back here that, you know, stock is down a little bit since then, so, you know, maybe some decent timing by the insiders in terms of when they cluster sell. Let's just verify real quick. Not a 10b51. It looks like this insider too has a pretty good track record of sales. We can take a look at Centene Corporation. So before, where I'm assuming, yeah, also a director at Centene Corporation. So kind of nailed these sales, as we can see. Pretty good. You know, maybe this one's timing not quite so good, but, you know, definitely more near the top on those sales. So pretty good sales overall. This is also, you know, I guess it fits right in the middle of in terms of size of selling 8% of their holdings. Not nothing, not huge, but not nothing. If we go take a look at what exactly is going on at Corn Ferry, we can see obviously a lot of volatility. Stock, you know, earnings estimates coming down a little bit. So that if you were looking for a short, that's something you'd like to see, where you've got earnings estimates coming down, but the stock price has actually gone up since that's happened. So that could be notable there. If we look historically, it looks like they're trading pretty even value, or you know, compared to their historical. They don't seem particularly expensive. So that's, you know, maybe a note against why this might be an interesting short. They've also increased their share authorization. A lot of companies aren't very good at share authorizations, but you do like to see companies buying back shares when they're undervalued. So, you know, on the flip side of that coin would be, you know, share repurchases are probably tend to be bullish, or at least neutral, definitely not negative, I would say. So probably maybe another strike against it right there. And then let's see if they say anything on their earnings call, if we can find anything here. We actually see quite a few decent numbers here. 5% year-over-year revenue growth, adjusted EBITDA up 8%, margin expanding 50 bips, EPS increased 11%, executive search growing, professional search growing, digital subscription revenue growing. So all of this looks pretty good. If we look at anything else here, contracted backlog grew, digital headcount was reduced. So, I mean, overall, just looking at those, you'd say pretty good numbers. If we look at guidance here, let's see. It looks like they're giving a slightly conservative guidance given seasonal trends and economic uncertainty. Some stable EBITDA, continued profitability, EPS. The key question here, which somebody says, Q2 guidance implies a slight revenue decline or dip despite seasonality. Is this conservatism? They say yes, guidance is conservative due to economic uncertainty. So that while all of the numbers look good, they do actually guide for revenue dip, which is sort of interesting. And then they do claim, you know, it's a conservative guide due to some macro concerns. However, that, you know, does the insider selling maybe hint at the fact that these macro concerns are, you know, very legitimate concerns, and that this conservative guidance might actually not be so conservative and things come in a little worse than expected? I think that's really, they are in a very tough, I mean, the professional services, you know, staffing, recruiting, that kind of thing is certainly a tough environment to be in. So I do think if you are bearish on that industry overall, or looking for shorts in that industry, then you could probably craft a good enough story here at Corn Ferry when you've got the insider selling along with the revenue estimate declines. I think all of that could kind of put together a story, you know, and conservative guidance and all that stuff. You could make this a potential short. I think just sort of standalone, if you kind of remove the industry concerns overall, I think it's a little harder to nail down the short. And the best case is really just that conservative guidance is actually them hinting at some legitimate issues, and not truly just like, we're just being conservative because we're trying to sandbag and beat guidance in the future. Maybe it's we're being conservative because there are some legitimate issues here that we might run into. So I think that's a good place to end it. You can go find all the top insider trades at ceowatcher.com, and don't forget to like and subscribe, and we'll see you next time.